India, with its vast population and growing economy, has long been seen as a land of opportunity for foreign investors. The country boasts a young and vibrant workforce, a rapidly expanding middle class, and a government committed to economic liberalization. These factors have, in recent years, positioned India as a hotbed for foreign direct investment, attracting billions of dollars in capital from across the globe. However, recent trends paint a more concerning picture. The flow of foreign direct investment into India has slowed, raising concerns about the country's ability to maintain its economic momentum. This decline in investment comes at a critical juncture, as India seeks to bolster its infrastructure, create jobs, and secure its place as a leading player in the global economy. The reasons behind this downturn are complex and multifaceted, ranging from global economic headwinds to domestic policy challenges. Understanding these factors is crucial for policymakers, investors, and businesses alike, as they navigate the evolving landscape of Indian investment. The decline in foreign direct investment to India is not merely anecdotal, it's backed by hard data. In the fiscal year 2021 to 2022, India attracted a record $84.8 billion in foreign direct investment. Fast forward to 2023 to 2024, and that number plummeted to $71 billion, marking a 5-year low. This downward trend is a stark contrast to the record-breaking levels of global foreign direct investment witnessed in recent years, highlighting India's struggle to maintain its share of the pie. Further emphasizing this point is India's shrinking share of global foreign direct investment. While the world witnessed a surge in cross-border investment, with global foreign direct investment reaching an unprecedented $41 trillion in 2023, India's ability to attract a piece of this burgeoning pie dwindled. The country only managed to secure 2.1% of global foreign direct investment in 2023, a significant drop from the 6.5% it commanded in 2020. This decline in foreign direct investment is concerning, especially as it coincides with a period of robust global investment activity. It suggests that India is losing its attractiveness as an investment destination, prompting investors to park their capital elsewhere. One of the most significant factors behind India's foreign direct investment decline is the slowdown in the US economy. The US, being the world's largest economy, has a ripple effect on global markets. Its economic performance, or lack thereof, sends shockwaves across the globe, impacting investment decisions and market sentiment. India, with its strong economic ties to the US, particularly in the IT sector, has felt the heat of this slowdown. The US is a major market for Indian IT services, and the economic uncertainty there has led to reduced demand and increased pressure on Indian IT firms. This slowdown has not gone unnoticed by market analysts. Prominent firms like Jefferies and Citi have downgraded their outlook on the Indian IT sector, citing concerns about US economic growth and its impact on IT spending. These downgrades have further dampened investor sentiment, leading to outflows from Indian stocks, including those of major IT companies. While the US economic slowdown has cast a broad shadow, the pain has been particularly acute in India's IT sector. The sector, once a darling of foreign investors, has seen a significant outflow of capital. From October 2024 to March 2025, foreign portfolio investors pulled out a staggering $803 million from Indian IT stocks. This exodus of capital from the IT sector is a significant cause for concern. The sector has been a major driver of India's economic growth and a magnet for foreign investment. Its current struggles underscore the vulnerability of export-oriented sectors to global economic headwinds and the need for diversification. However, the challenges extend beyond the IT sector. Consumer stocks, reflecting the health of the Indian consumer market, have also experienced significant outflows. This suggests that the slowdown is not limited to specific sectors, but reflects broader concerns about the Indian economy. Section 5. Global Headwinds. India, not immune. While domestic factors have played a role in India's FDI decline, it's crucial to acknowledge the impact of global economic headwinds. The interconnected nature of the global economy means that events in one part of the world can have far-reaching consequences. The US-China trade war, for instance, has created uncertainty in global markets, prompting businesses to postpone investment decisions. Similarly, rising interest rates in developed economies have made emerging markets like India less attractive to investors seeking higher returns. India, despite its size and potential, is not immune to these global forces. The country's reliance on exports, particularly to developed economies, makes it vulnerable to economic slowdowns in these markets. Section 6. The Policy Playbook. Can India turn the tide? The Indian government, recognizing the seriousness of the FDI decline, has sprung into action, implementing a series of measures aimed at reviving investor confidence and attracting foreign capital. These measures include a combination of monetary and fiscal policies designed to stimulate economic growth and improve the investment climate. The Reserve Bank of India, the country's central bank, has taken center stage, slashing interest rates to make borrowing cheaper for businesses and encourage investment. This move, coupled with tax reductions aimed at boosting corporate profits, signals the government's commitment to creating a more business-friendly environment. Beyond these conventional measures, the government is also exploring more innovative financing options to attract foreign capital. One such proposal under consideration is the introduction of mezzanine financing, a hybrid of debt and equity that provides investors with a more flexible investment instrument. This move, if implemented, could attract an additional $20 to $30 billion in overseas inflows. Section 7. Looking ahead. The need for a long-term vision. While these short-term measures are crucial for stemming the decline, India's ability to regain its position as a top FDI destination hinges on a long-term vision. Addressing structural bottlenecks, improving ease of doing business, and fostering a stable and predictable policy environment are essential for attracting sustainable, long-term investment. India needs to look beyond merely attracting capital and focus on attracting the right kind of capital. Investments that align with the country's long-term development goals, create jobs, enhance productivity, and contribute to sustainable growth. Attracting $100 billion in FDI annually is crucial for meeting India's investment needs. This ambitious target requires a multi-pronged approach, addressing not just economic, but also social and environmental considerations. Section 8. Conclusion. Navigating the path to investment recovery. India's journey to regain its position as a top FDI destination is fraught with challenges, both domestic and global. The decline in FDI is a wake-up call, highlighting the need for urgent action and a shift in perspective. Addressing global economic headwinds is crucial, but so is addressing domestic challenges. Policymakers need to focus on creating a stable macroeconomic environment, fostering a predictable policy regime, and addressing structural bottlenecks that hinder investment. India's long-term economic prospects remain strong. However, realizing this potential requires decisive action, strategic planning, and a commitment to creating an investment climate that is both attractive and sustainable. Section 9. A call to action, engaging in the dialogue. The decline in FDI to India is not merely an economic issue. It's a national challenge that demands a collective response. It's time for a national conversation, a dialogue that involves policymakers, business leaders, academics, and citizens alike. We need to ask tough questions, challenge assumptions, and explore innovative solutions. What kind of India do we want to build? What role do we envision for foreign investment in this journey? How do we create an investment climate that is both attractive and responsible? The future of India's economy and its place in the global order depends on the choices we make today. Let's engage in this critical dialogue and chart a course towards a more prosperous and sustainable future.